We will have the lines muted for the call today, so if you have any questions, you can go ahead and feel free to enter them in the chat feature. You'll see in your control panel, so I will be watching those as the show goes on. Or you can save them for the end, and we'll have a brief Q&A where we'll answer any questions you have at that point as well. Now today the focus will be usable sales content. We understand the importance and value of every lead and referral you get your hands on. And from the moment you meet a client for the first time, the odds are stacked against you. Will they have the funds? Will they qualify for underwriting? Are they serious about their future, and are they willing to commit to what's necessary? With all that going on, it's extremely important you catch your client's attention and separate yourself from the competition. Our guest today has a powerful presentation he's going to go over that'll help you do just that. With us today, we have Big Mike Zimmaretti, former NFL tight end and Vice President of the National Life Group. Go ahead, Mike.
Well, thank you, Jason. Appreciate the introduction. And I'm coming to you live from rainy, hot, sticky Tampa, Florida. And the reason I'm mentioning that, I don't want you to feel sorry for me, but if perchance you hear a lot of noise in the background, there is a huge thunderstorm overhead above my office. So I'm not in a war zone, but I can assure you that, and I warned Jason that if I disappear, it might be because of a loss of power. So let's move forward and kind of get in. I just want to make sure we got my slides in order here. What I'm going to do for you today, my background has been, as Jason mentioned, I was in the National Football League and the Canadian League as a football player. But when I got out of professional sports, I too was an agent in the field. I cut my teeth in the late 80s with Western and Southern Life Insurance Company, debit company, and I was a debit agent essentially knocking on doors. So I really, two things here. I really respect what you're up against. I respect what you do, and I appreciate how precious, as Jason mentioned, leads are. And what I'm hoping to establish in this presentation is, welcoming you to the new type of life insurance sale, life insurance that you don't have to die to use. And it's really going to revolve around living benefits, as we all know, as the title of this WebEx. But I can tell you unequivocally, if I would have had this value proposition when I was knocking on doors and I had referrals, my life would have been a lot easier, and maybe I wouldn't have gone the route of being a wholesaler with insurance companies over the last 20 to 25 years. I may have been in private practice as an independent agent like you. So here we go. My slides are being a little finicky today, but our motto, or not our motto, but our inference today is life changes, and there's Big Mike. I was kind of cranky in that picture. I was with the Green Bay Packers, probably because I wasn't with them too long, but my career spanned from the old Los Angeles Rams in 1981 through to the Atlanta Falcons, the Buffalo Bills, and I finished my career in 87, 88 with the LA Raiders. Life changes, and it changed for me. And if we kind of move forward here, you see here's my corporate picture with the National Life Group. And you could see there's been indeed a lot of change in Big Mike's life. You could see the long blonde hair is gone, the Fu Manchu is gone, but more importantly, I'm smiling because the value proposition I'm about to share with you is bar none. And I am extremely happy and passionate, as you will no doubt find throughout my presentation this morning, because this is just absolutely an amazing value proposition. A little bit about the National Life Group. We were founded in 1848. What does that mean to you? We have longevity. We are the third oldest life insurance company in the country. We've been in business for 166 years. Now, is that important? Yes, it is, because when you sit with your clients, eventually at some point in the conversation, when you're looking at writing a check or possibly setting up the parameds and moving through with the sales process, somebody somewhere is going to say, hey, time out. Tell me about this company that I'm writing the check to, because it looks like I'll be writing a nice check to them for the next 10 or 15 or maybe 20 years. Are they going to be around? And more importantly, this illustration you showed me, I've had bad experience in the past with life insurance situations, or my friends have. And is this illustration really going to happen? Or is this a hallucination on paper, which I love to throw out there, because that's the biggest fear of everyone. What is it? Tell me about this company. How do you know they're going to perform, and why are you using them? So who are we? 166 years young, third oldest insurer in the U.S. We promoted permanent insurance. We were one of the first folks to get into the indexed annuity arena back in 1996, 97, and we were also one of the first to get into indexed universal life sales. We're very conservative. We're a mutually held company, which means that's very important, because if you get a really, really drilled down consumer who says, well, I really want to know how this company can keep their promises. Well, if we were a stock company, we'd have to kowtow to Wall Street and really worry about our return on equity, our ROE, and everything that goes with that. And the CEO, every 2-3 years when he signs his contract, has to worry about what Wall Street thinks of him or her. In our situation, we're not told what to do by Wall Street. That way, our board of directors can simply say, let's do what's best for our clients and our company, and not worry about the greed factor and all the other things that go with corporate America. So that's one of the big things. And the other big thing is very obvious. If you've been in business for 166 years, you probably know what you're doing, because you've been through every conceivable World War, depression, economic downturn, and we've been profitable. We were even profitable in the economic downturn of 2008. And you can see we're financially strong. We're an A-rated carrier. We have over $30 billion in assets, and we have impeccable financials. More importantly, and this I love to show people when I'm doing live seminars, no matter who you're doing business with, the life insurance industry has kind of been flatline over the years, and if they've seen any growth, it's been around the 10 to 13% area. But in our situation, we've experienced, we did over $150 million of target premium last year, which is up considerably over each year. We've had incredible growth. But this year we're looking at, we did over 32% increase last year. We're already at 34% over last year, and we're looking to blow through $200 million, which puts us in the third highest spot in the country in terms of IUL sales. And the two carriers that are in front of us have large institutional sales, so we really have done a great job. So why is that? It's our history of living benefits. And I'm really going to drill down simplistically on what this means. But as you can see with this slide, we're no novice to this. We innovated living benefits. We know what we're doing, and a lot of competitors are copying us to this day. There are 28 to 30 index universal life carriers in America. Out of those 28 to 30, and I say 28 to 30 because some come and go and some are not competitive and some pull their products and some add something. So let's say there's 30 for argument's sake. And out of that, 12 to 14 have some sort of living benefit configuration. But only one has an entire package that will include lifetime income with that story. And it's very important because we'll get to claims paying ability. Do we know how to pay claims, and do we know what we're doing with this living benefit story? So let's get to it. Let's roll up our sleeves, and here you could see the life puzzle. And as I say to Jason quite a bit when we talk tactics and sales strategy, what do we all have in common? If I was in a room and I was looking at you standing in front of the table and chatting with you, I'd say, what do we all have in common? Other than we can't wait for football season to come, it's training camp, and we're all excited. And someone would raise their hand and say, well, death and taxes. We're all going to die, and we all have to pay taxes. Well, that's kind of where we're going. But what I really mean by that question is, what we all have in common is we all want to live as long as we possibly can. And this is kind of a downer moment, but that's the kind of business we're in. We have to give our clients a reality shake and say, listen, Mr. and Mrs. Client, I know your goal is to live as long as you possibly can, but if we reflect for a second, something's coming to get us. How do we financially plan for that? Is it going to be cancer? Am I going to battle cancer? Am I going to be really healthy body-wise, but my mind, I'm going to lose my functionality and lose activities of daily living or become cognitively impaired? Am I going to battle multiple sclerosis or ALS? Am I going to battle heart disease? I mean, it could go on and on and on. And then having the mindset that you want to live too long or live long as you possibly can, not too long. Are my assets going to keep pace with us or pace with us? And Jason, I think the biggest challenge of any financial advisor is A, we don't know when our clients are going to die, and B, we don't know what they're going to die of, and that really complicates two pieces of these puzzles, because do we sell them several, like a long-term care policy, several AFLAC policies, DI policies, term life, whole life, and they become insurance rich, and premium poor. And even then, when are they going to die? I mean, are they going to live to 105? Are they going to live to be 98? Are their assets going to keep pace with that? And is the company going to perform? It's a dual-edged sword. So I've made this very simple for all of us on this WebEx. Of all the research I have done, success is defined by the why and the how. Where most advisors and agents fail selling life insurance is they go right to the how. The how is the product solution. And it's kind of, forgive the expression, product peddling, going to a client and saying, you need to buy life insurance. Well, they probably do, as we looked at that previous puzzle of death, illness, and living too long. However, the first coaching point I can share with you is please, please, please keep everything simple and establish the why. Why clients should have this type of protection. It's simple, basic buying psychology. If we drill down to basics, it's need or greed. Keeping it simple. Giving a client the permission slip to do other things that they like to do, or choice. So let's examine the why up front, because this is so important. Again, using football analogy, blocking and tackling. You got to learn how to block and tackle before you can throw the ball down the field or hand that ball off to that really speedy tailback and look for excitement. Creating a legacy. Leaving a legacy to your family, to your kids, to your grandchildren, or to your business partners and your life partner, your wife, your husband. Potential for tax-free income through policy loans and a unique living benefit that we have innovated called the Guaranteed Lifetime Tax-Free Income Strategy, LIBOR. These are important because America, and I'll tell you, we're in a political period of upheaval. We have wars all over the globe. We have conflicts all over the globe. We have conflicts here in our own country with the Senate versus the House of Representatives, and taxation is on the move. Tax rates are not going down. They're not going anywhere but up. So it's not what you earn, it's what you keep. And people are concerned that when I retire, what am I going to keep? And how much am I going to have to pay in taxes? So that's why you should be interested in a product that may give you some tax leverage. How about higher caps rates than annuities in other areas? Yes, we'll examine that. That's a why. I looked at an annuity the other day, and I really didn't get turned on by a 3% cap. Even if it was 4%, that's not exciting, and 4% would really be on the high end of what annuities are paying today. Accelerated benefits, well, I'm 58 years old. My grandmother lived her last 9 years of life prior to dying at 98 in a nursing home. And my mom tried to take care of her, at home, which was really, really a tough situation. Then there's the success of Aflac. They sell a ton of policies that are geared around cancer protection, heart, stroke. Those are the number 1 and 2 sellers of those worksite marketing companies, and it's because consumers are concerned about it. Why? Here's the why again. Because my intent is to live as long as I possibly can, and I know as a former athlete who beat my body up, and now I play golf and I work out, I'm wearing my body out. There's no two ways about it. And at some point, and I want to live to be 100 years old or longer, even if I have to sit in a wheelchair in front of a big screen TV watching Monday Night Football, that's what it's all about for me, and something's coming that I have to deal with. And again, what about tomorrow? Future tax rates and products that may or may not perform. So this is what we all have in common as human beings. So do you see what I just did there? I've kind of disturbed my client a little bit, but I wasn't being mean. I was being real. I was telling them the truth. I don't have a crystal ball, Mr. and Mrs. Client, but what I can do is bring in a how later on of a Swiss Army knife approach that gives you choices, because we don't know if you'll face anything. I used to see clients that say, I'm just probably going to, I hope I die in my sleep, and they cross their fingers. I hope I don't need long-term care. Well, hope is not a strategy. It's not a financial planning strategy. What are you going to do if you're wrong? So here we are, living benefits. It's the modern-day approach, the new approach to life insurance selling. Life insurance that you don't have to die to use. And it's as simple as this, folks. You want a sales tip right out of the box? How about this for keeping it simple? You can walk up to anybody on the street, any client. You'd be playing golf, and you can turn to the person you play golf with, and they say, hey, what do you do for a living? Well, I'll tell you what I do for a living. Do you own life insurance? And the answer is either yes or no. And if the answer is yes, you smile and you say, do you own the old kind or the new kind? And if they say they don't have life insurance, you could say, well, I think you should consider life insurance because it's really changed from the old days. There's a new kind of life insurance out there. Life insurance you don't have to die to use. So unlike Big Mike knocking on doors when he was with Western Southern Life, my sales approach was the tombstone and formaldehyde approach. Doom and gloom. Close your eyes and think about you not coming home from work today, being claimed in an automobile accident, and what would happen to your family financially. That was pretty tough stuff to deliver day in and day out. Life insurance opportunities. Here's another why. Yes, I do have life insurance. Well, were the initial arrangements properly set up, or have they changed? Were you married at the time and now you're divorced and maybe you're remarried, or you have children from the previous marriage? And again, client circumstances. You were a business owner, but you've taken in a partner. Do you need some buy-sell insurance or business transition insurance? And did you take out a term policy for all of that? But you know what? You're almost at the end of the term. What are you going to do now in the next year or two? What if you become uninsurable? Then there's nothing you can do. Also, do you have an agreement in place? Very quick, another coaching point, a true story, and life insurance is about stories, as you will see a very powerful living benefit story in a second. I have an agent in Tampa, Florida here that came to me the other day and said, Mike, I sold $1 million term with you 8 months ago to a prominent Tampa attorney, and I don't know if you're aware of this or not, but he passed away. And I said, no, I did not know what happened. And he said he was out boating with his family and friends, and when the day was over, they had trouble getting the anchor up. So he got out on the bow of this big boat with his friend and was really tugging on the rope to free this anchor, and he lost his balance and he fell into the water. Now, he was a good swimmer, but there was a pretty good current, and he drowned. And it was really sad, 58 or 59 years of age. So it even got sadder because when the agent went to the wife to get more information and tell her we needed accident reports, Coast Guard reports, all of this, she said, you're not going to believe this. My high-flying attorney husband never had a will or a trust. So now I got to hire a probate attorney because his ex-wife is going to get wind of this $1 million policy, and so are the kids, and we don't know what he wanted. So there's a lot of opportunities out there. There are more appropriate contracts available now that have less, mortality charges. Some of these old contracts have no living benefits at all or very limited amounts, like only up to $250,000 for certain benefits. The agent can be long gone, out of the business, retired, or just wasn't successful. And again, do you have a will or a trust or some type of a business transition? One of the easiest ways to get into the business market is to say, Mr. Business Owner, what are you going to do with your business when you retire? Or if something happens to you, do you have any plan for that? Yeah, I think I'm going to leave it to my kids. Well, do they want to run the business, or are they going to turn around and sell it? And would they know how much the business is worth? Have you evaluated this business? No, I really don't know what it's worth on the open market. So those are some of the whys. And before we go into the how, let me just summarize that research has dictated from friends of mine at the Wealth and Wisdom Institute who have said, again, before you go into the product solution, establish the why, because that will help you when the client writes those renewal checks and you get that lapse notice and you call them and say, why aren't you paying your life insurance? Well, things are tough and I had a bad year this year, but remember why we bought this. It does this, 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 and this. And you have such a powerful story that you're about to see that the client should say, unless I'm absolutely deadpan broke, thank you for calling. I need to write that renewal check because I cannot let this insurance policy lapse. Reviewing Indexed Universal Life on the spectrum of guarantees, it's on the lower end because this is built for speed. This is built for upside, just like an annuity. The guarantees on these products are about 2.5%. And as I say that, there's a bolt of lightning and thunder in the background. Upside potential is great with 13% caps, 11.5% caps, 140% participation rates. No caps at 62 and 125%. But flexibility. Indexed IUL has the same flexibility as UL. You can pay minimum premium, target premium, or overfund it. And just like an indexed annuity, Index UL is all about the upside potential with downside protection. It's the same explanatory terminology with your clients. We've kept things simple. We only use the Standard & Poor's Index, which is a broad market-based index, and we use the Morgan Stanley Emerging Markets. I've been with carriers where we've had 10 different indexes, and you know what, ladies and gentlemen, people come back to the S&P 500 most of the time and the fixed bucket because the rest is confusing, or they just get tired of reallocating all the time. Again, another coaching point, please, 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 when you look at an IUL as your friend and as your coach and as a wholesaler, remember that these policies are made to be driven. They are to be max funded. If you're going to use minimum premium, that's okay, but the client's really not going to see a great upside in cash accumulation, nor are they going to be really excited about tax-free loans and lifetime income because the policy just won't perform the way you want it. So this is something for someone who really wants to put some money into it. So let's examine our scenario here. Dying too soon, becoming ill, living too long. And a picture's worth 1,000 words. Here is a fictional story that will show you how this works. Here is my friend Mark. Mark is 35 years old, and he's married, and he has an 8-year-old son. He has your typical needs of any middle America family. He needs death protection. He needs protection in the event of illness. He needs cash accumulation, which is deferred, which you can take money out tax-free for emergency, future college expenses, and more importantly, retirement income, because, you know, 401ks and other programs may not be enough to really help in the solution. Fictitiously, Mark purchases a $1 million death benefit at age 35. He's going to put in $950 a month into this product. Let's see what happens. For the first 10 years, Mark fully funds this. Let's say Mark is on commission. He's an advisor and an insurance agent himself on commissions. Years 11 through 14, his young son is now in college and needs a little extra money to help out with college expenses. So Mark, through the withdrawal window, withdraws $5,000 a year from his IUL tax-free to help out with his son's college expenses. Things are going well. Mark is working and clicking along, and 20 years later, he's unfortunately diagnosed with multiple sclerosis. Well, in an effort to live as long as he possibly can and pursue a quality of life, Mark stops working temporarily to drive this, in an attempt to drive this disease into remission and submission, and he withdraws $40,000, or actually under the chronic illness benefit, he withdraws $40,000 a year for 3 years tax-free to deal with it, and he's successful. And he goes back to work, and then at age 65, Mark retires. Now, he could take any type of loan strategy, but he chose to take this lifetime income benefit rider because, again, he's concerned about income for life, and it turns out to be $21,000 and $219 a year tax-free for life. Mark passes away, unfortunately, at the age of 80. There's $180,000 and change of a death benefit left. Let's do the math. He put in $262,000 over the years, but look at the withdrawals in green. You know, he withdrew $20,000 for his son's college to help him out, tax-free. He withdrew $120,000 over 3 years, tax-free, to deal with his multiple sclerosis. It could have been anything else. It could have been a heart attack. It could have been dealing with cancer, a number of things. Lifetime income benefit rider benefits, he liberated himself. I like the word liberate from unnecessary taxation and the fear of outliving your income. He got $339,000. He would have continued to get more if he lived to be 100. That was the key here. Remaining death benefit was $180,000. You could see the math, $660,000 and change of tax-free benefits. And ladies and gentlemen, this is just a fictional scenario. This could have been anything. It could have been long-term care, could have been under ABR 2. So let's take a look at that. But what I want to leave you with, simplicity. This is a Swiss Army knife approach. We feel that the reason we are having such a spectacular run the last few years and being the number 3 provider, quickly becoming the number 2 IUL provider in the country, is that we have the most efficient planning tool with this living benefit story. And it gives your clients multiple strategies. We just don't talk about ABRs, which are accelerated benefit riders, which we call our living benefits. We've got the experience of paying claims, and that's important too. Don't think past that, because even though you're a new company and you maybe copied somebody's living benefits, can you administrate them correctly and pay them out when the time comes? So let's take a quick look at why we're different. We pioneered these. These are free of charge, built into the policy with no additional underwriting. So ABR1, Accelerated Benefit 1, terminal illness. The client can get up to a maximum of $1.5 million tax-free. Look at the benefit, the death benefit clause. If they are told that terminal illness death will occur within 2 years, the industry standard is a year. I don't know about you, but if somebody told me I had less than 2 years to live, I'd probably pursue my bucket list. And there's 3 things you could do. Pursue your bucket list, get your affairs in order, and get your family all squared away financially. Or number 3, which is something I would look at too, I might pursue alternative care. Because remember, in the beginning of our conversation in this WebEx, I mentioned that clients want to live as long as they possibly can. So if a client fictionally has an inoperable brain tumor, and they get over the shock of the diagnosis and they start researching in an attempt to live forever, or as long as they possibly can, they find a clinic in South America or in Europe somewhere or Switzerland, and say, hey, they're experimenting with laser surgery to shrink inoperable brain tumors. I'm going to go over there and try to prolong my life. And here's kind of an ironic riddle for you. When can a death benefit actually serve to save one's life or prolong one's life? An accelerated benefit rider, terminal illness. So I think you got the story here. I'm going to be very, very approximate with this type of present value, because everybody always asks me, well, how much do you get? I mean, how does it work? Well, for $100,000 of death benefit, you've held the product for about 10 years, the present value is somewhere around 80%. We have software that'll show it to you exactly, and it's based on the death benefit, not the cash value accumulation. So just think of around 80. So in this case, this client at age 65 would cash out his policy and get $84,000 tax-free to do what they want. ABR2 is chronic illness. I don't like to call this long-term care, because losing 2 out of 6 activities of daily living or being cognitively impaired can happen from a car accident, can happen from a heart attack, stroke, could happen from other diseases. So realistically, this is chronic illness. But yes, it does encompass long-term care, because that's usually what happens, and you lose 2 out of 6 ADLs. And in this case, we present value this number down, again, going back up to $1.5 million. That's a lot of cash. But again, that the present value, I'll probably have to have a $2 million policy or better to get the full $1.5 million. But look at what it'll do. You'll get 2% per month. And that probably equates over 4.2 to 4.5 years of tax-free benefit on a monthly basis to deal with that type of affliction. And then thirdly, the icing on the cake is critical illness. We were the first company to really bring this in to the package, addressing 7 major life situations: heart attack, stroke, cancer, and you could see the rest. And this is a sliding scale of anywhere from Category 1 to Category 4, Category 4 being the worst and life-threatening, Category 1 being the least. Now I'm going to stop right here and give you a differentiator over our competition. A lot of our competition has some form of these living benefits. Most of them don't have up to $1.5 million. But what a lot of them don't also have is they don't allow you to partially accelerate these riders. You don't have to be an all or none scenario. You can say to the company, look, I had a life-threatening experience, and I could get the full $80,000, but just give me Category 1. Give me $50,000 tax-free, and let's leave the policy in force so there's some death benefit for my family. That can be done under terminal, chronic, and critical illness. So that's just a phenomenal situation. Very flexible. How can I offer these benefits with no additional cost? Well, we just don't charge extra premium for the rider. We don't. This is just something we have done for years and years and years. And again, the benefits are calculated on a present value basis. The longer you hold the policy, the greater your present value is, and that's how these living benefits are gauged off of the death benefit. So we're very unique in that we offer these on all of our products. Our term life products, we have a 10, 15, 20, and 30-year level term with living benefits. We have a second to die IUL. We have whole life products, and of course we have fixed and indexed universal life. I'm going to take a departure now and give you the game changer. And again, with a football analogy, forgive me, but I'm a football guy. This is akin to passing coming to the NFL. Instead of the 3 yards and a cloud of dust and the running game, when the NFL introduced the passing game, it became very exciting. This is the same innovation in the life insurance industry. We were the first life insurance carrier to bring guaranteed lifetime income to an index universal life chassis. And that's huge because if you look, I know a lot of you out there have sold indexed annuities with income riders, and it's the paycheck for life scenario. This is the biggest fear of most folks. Living too long, 42% of Generation Xers say they are not confident that they will have enough money to retire or cover medical expenses during retirement. Because remember, they know the game is to live as long as they possibly can. And this is a great slide. What keeps people up at night? You can see the percentages, but again, the highest percentage, 62%, worry about retirement assets lasting a lifetime. Because, you know, with my luck and I retire, what if there's an economic downturn? What if there's a severe conflict? You know, there's a lot of what ifs. So what's better for your clients? Taxable, tax deferred, or tax-free? Well, that's an easy one. Tax-free. If it's tax-free, it's for me, as long as it's legal and we can get away, and it is. Taking money out of a life insurance policy through the loan provisions is tax-free. And here's a snapshot of how the lifetime income benefit rider works. We do have a tutorial on how this benefit works. Today, I promised Jason I would not be too technical. This is just an overview. You can see the death benefit up there in purple, and you can see the cash value accumulates. If you hold the product for 10 years, after that, you can turn this rider on at any time at 65 basis points to turn it on, and then you get income, and we have a calculation. But as you take money out, your death benefit lowers, as does your cash. I wanted to show you this picture for 2 reasons. It's huge because what if the client right here, while they were taking income, let's say that's 5 years later, gets sick. They lose their activities of daily living, or they're fighting cancer or heart disease. They can stop their lifetime income, and they could accelerate whatever death benefit is here under those 3 appropriate accelerated benefit riders. So this is huge. This is really huge because it gives the client the ultimate choice. And as you can see, this income is tax-free for life. Just a quick summary for those of you that aren't really up on life insurance loans and how money comes out of permanent life insurance policies. With most of our competitors, there are only 3 traditional ways that income comes out of life insurance policy. Tax-free withdrawals to basis, and that's based on a FIFO method. On annuities, it's last in, first out. With life insurance, it's first in, first out. So you can take money out, and the IRS will look at that as your premiums coming out first, and it'll be tax-free. Or number 2, you can take a variable, or what we call the participating loans, where the interest rate varies, and that will give you the highest income out of a product. But there's a concern that, well, will I be depleting the cash too quickly, and will this policy lapse and therefore not be with me if I live too long? That's a concern. And then there are fixed wash loans, which are also tax-free at a flat interest rate with a wash effect that should last you a significant period of time. But the difference between a variable loan and a fixed loan could be 25 to 40%, depending on interest rates, with the variable loan being higher. I took the liberty of just showing you, this is just strictly an example for numbers. This is a male age 45, preferred non-smoker, putting in $1,000 a month into an IUL for 20 years. At age 65, he's got a death benefit of $660,000 with cash value of $492,000. And this is illustrated at a top rate of 8.20. Numbers are going to change with lower interest rates and possibly higher loan charges, but tax-free withdrawals, you take out what you wish. Variable loan, $67,000 tax-free, but look at the fixed and the lifetime income almost in half. But again, the reason why, 3 and 4, the fixed tax-free loan should last a lot longer than a variable, because a variable is going to take a lot of money out of that contract, and you're gambling. You're gambling that the product is going to perform, and what if you live to be 98 or 95? Will that policy collapse? And that's a big deal, because it's not just, I don't have any money anymore. If a life insurance policy, and you've been taking loans out of it, collapses and lapses, the IRS can come back and tax you on all the previous income. So that's a catastrophic situation that most life insurance sales folks really are concerned about. But the big key is right here, this asterisk. 65 basis point charge at age 65 or 66 as this person turns it on. We do not charge for our lifetime income benefit rider until the client actually turns it on, unlike an annuity where you're paying for it from day one. What does that mean? The client and the agent can get together at the future time of need, at age 65. They don't have to decide now. They can do it down the road, and they have to look at things such as, what's your health, what's your longevity, are you still fearful of living too long? And the answer might be, no, I'm not, because my doctor has informed me that, you know, I'm battling cancer and I've had 2 heart attacks, and my heart's not that great. I'm facing some more chemo and radiation. My doctor told me I'm not the kind of guy that's going to live past 80. And this client might be 74, 75, or in their late 60s. So you might say, well, you know what, in that case, we can take a variable loan and get you more income, and we don't have to worry about you living to be 95 or 100. I don't think you follow the bouncing ball there. On the flip side, you might get a client that is so healthy and has so much longevity in their genes that they may say, I want that lifetime income benefit rider. I know it's less income, but I want to be able to sleep at night knowing that I'm going to get income every year tax-free for the rest of my life. And you can actually do it in 2 ways. There's a number of ways we can discuss at some other time when we have a tutorial on the living benefit income rider. You can use the cost of living benefit, which escalates every year, or you could just pick a flat rate. So this is simplicity. This is choice. And the biggest anxiety is what we call in the industry risk mitigation. Will the product perform as illustrated? And if I take too much money out of it, was this whole thing baloney? And was it a hallucination on paper? And boy, what are you going to do when your client runs out of money at age 80 or 85? What then? Not very many options on the table. So lifetime income benefit rider liberates your client from these risks and anxiety. But more importantly, folks, I just want you to just keep this very simple. It's in the policy free of charge until you use it. It's a safety net. It's kind of like having those extra airbags in your car for safety. You hope will never go off, but if you're in a catastrophic collision or whatever, it's nice to know you're there. And just really quick going through this lifetime income benefit rider, there's no policy until you turn it on, if you ever turn it on. And I'm just trying to move a little window out of my way so I can see the rest of this. Here we go. Minimum waiting period is 10 years on our regular Flex Life IUL. We do have a secondary product that we use for simplified issue, which is no fluid underwriting, no paramed, no exam, and that's a 15-year wait. And I'll spare you all the details, but essentially it's a tremendous, tremendous product or policy feature to have. So back to coaching, which I like to do. I like to think of myself as a coach rather than a wholesaler. Here's a great sales idea. Go back to your clients that have annuity income riders and say, you know that peace of mind I gave you with the annuity income rider? How would you like to do a life insurance product to sit back as a safety net, and while you're taking that income, if you are indeed concerned that Social Security is going to change or the tax rates are going to get too high, let's pump some money into this IUL, and we could use it as a secondary tax-advantaged, tax-free income base for a wait-and-see period, or we'll enhance your survivor benefits to your family, and we'll give you a package of living benefits, which gives you the permission slip to kind of, you know, this is leverage. This is leverage. You know, life insurance is now becoming an asset class, and if you take a percentage of your assets and put it into a life insurance program, it gives you the permission slip to maybe be aggressive in other areas, in real estate, in the stock market, with your securities portfolio, because you know you've got some tax-free dollars in the event of death or illness. So that's huge. Mike, what are the opportunities? I'm talking to myself here, or Jason, what are the opportunities? And well, aside from mom and pop middle America, small business owners can share in these benefits, and we have a ton of life insurance programs for business owners, and there's tons of small businesses in America, over 5.1 million, and they're looking for ways to save for retirement. They can do life insurance in qualified plans like profit sharing plans, defined benefit, and Section 79 plans, which gives them the ability to write the premium off and take it as a tax deduction for the business in certain circumstances. And simplistically, whether they do it through a qualified arrangement or through a business arrangement or just do it through their personal checkbook, tremendous tax-free retirement strategy for having a portable pension plan. As I mentioned, we do have a secondary product that has some underwriting concessions. If you're under the age of 65 and under $250,000 of death benefit needed, we can actually, through an electronic application, if all the answers are favorable on the health questions, you can get an underwriting approval in 8 to 10 seconds. And then we process it in 4 to 6 days, and there you go. You're getting a standard rate. But there's a lot of clients out there that really don't like having fluids collected, and they really don't like a paramed coming to their house or place of business, weighing them and putting a blood pressure cuff on them. Now, you may be sitting back and saying, okay, Mike, you keep saying this is simple, but a lot of it is a little confusing to me. What do you guys do in terms of your value proposition to get me up to speed, to make this simple, to take it to my client and start conversations that will lead to a sale? Well, a ton of things, but first thing is we have an incredible website with National Life Group University. You can work with your partners at Premier Life and Annuity, and they'll quarterback because they know all of these options that we have available for you. And by the way, at the beginning of my WebEx, I told you that our company was 166 years young. The National Life Group, located in Montpelier, Vermont, started out and still is a career captive company. But in 1996, we purchased LSW, Life of the Southwest, in Dallas, Texas, to be able to market to independent agents like yourself. And one of the big perks of being able to do that is you can now tap into the 166 years of what National Life has done to educate and help their career agents. It's all here. Sales processes, sales strategies. There are PowerPoint presentations, seminars. We even have a 40-year-old proven program, how to network with CPAs and be able to get them to work with you and refer you to their clients, etc. So in support of you, we really have a distinct, not only do we have incredible products, we have a sales desk, we have an advanced sales desk manned by estate planning attorneys. We have incredible new business and underwriting departments that you could speak directly to the underwriter. We have a life and annuity sales desk. We have tons of marketing support. But more importantly, with the advanced sales desk, my goodness, you can go into a business, collect data, and just do a little bit of fact-finding, and they will work with you free of charge to case design and look over programs that business owners might be embarking on now and actually enter into conversations with your clients as long as you're on the phone with them. Other support, we have summer sales camp that just passed up in Vermont, but you can look forward to once a year. We have schools up there that you can attend. We have a host of marketing tools and seminar selling, direct mail campaigns on our website. We've got the CPA Advantage program that I indicated to you that you can actually offer CE credits to CPAs if you want to bring them into your office, and we can tell you how that works. And of course, we've got a ton of marketing ideas and sales ideas. So folks, thank you. This was a lot of information. I wanted to be thorough, but my parting comment to you is, before we move to Q&A, is that please take all of this information and keep it extremely simple. It's life insurance. You don't have to die to use. You could see it's a powerful, exciting new era. We're not talking about death benefit being doom and gloom. We're talking about having the choice to use it now for many present-day situations that keep people up at night. So, Jason, I'm going to throw it back to you. It was my pleasure to be here this morning.
Thank you very much, Mike, and definitely we appreciate it. That was a very strong showing. As many of you can see, definitely very strong reasons why National Life Group is on the top of the food chain in the IUL marketplace. And I definitely agree with Mike was saying, go back to that coaching analogy. Think of Premier National Life Group as your coaching staff. You just keep it simple. Give us a call. We definitely like to go through, regardless of what walk of life you're at, whether you're that health agency looking to transition into writing more life, or you're the veteran that's got a prospect in mind. We'll do whatever it takes to help you connect these dots. So with that, Mike, I'm going to open the lines for the phones here. We've got a few questions here, so here we go. Okay, it's looking like most of the lines having a little difficulties getting that unmuted, but we do have a few here. I'll just read out loud that were typed in, Mike. The first one is, what happens if the LIBR, the LIBOR rider, is greater than the death benefit? Will there be residual death benefits so the policy doesn't crash? That's from Doug. Mike, are you still with us? I think the audio controls are not working here. Well, I do apologize for that, everybody. If you have any questions, feel free to give us a call. Our phone number is 800-365-8208. Just ask for your life marketers here at Premier, and we look forward to hearing from you. Thank you, everyone.